Good afternoon, traders. It's Sunday the 6th of January, and I'm going to give you your market breakdown for this week ahead. Now, this coming week, we've actually got our first full trading week after two kind of disjointed weeks over the holiday period. And it's also the first week back after that massive flash crash that we saw last week. So I'm just going to take you through what that essentially means for the market and how the market is shaping up from here on out. So if we start on Aussie dollar, here on the weekly time frame, you can see that price actually fell last week all the way down to 0.6750 weekly support, spiked to that region almost to the pip, and then we saw a very large reversal to close as this bullish pin bar candle. So you can see that price is back above that 0.7 major psychological level. As you can see how price has responded to this region before, we've now fulfilled that level and we've reversed with a morning star formation. So what I now expect is for price to head towards this 0.7250 weekly resistance, which is also in line with the refined region from this downside Fibonacci. So if we disregard this long spike, we've actually reversed from the prior lows, and we could be in a kind of range here. I'd just be wary as price approaches the moving averages, as they could provide some resistance and see price fall back down towards that 0.7 major level. And you can see I've got a little region highlighted there, which you'll now see as we move it down to the daily time frame. So here you can see Friday saw price back above that 0.7050 level. We failed to break the simple moving average despite breaking the exponential moving average. So now there's potential to see price fall back towards that 0.7050 to then take off to 0.7250. Here's that highlighted zone that I mentioned previously, and you can see how that lines up with these previous lows, with this previous support, which will now act as resistance. So yeah, I mean, price could fulfill that level, fall back to the 0.7050 and then extend higher. Overall, I am looking at this region. I'm looking for price to fulfill this 0.7250 level. In terms of downside, we'd have to see a break back through this 0.7050 and then through the 0.7 flat. I have mentioned about the significance of this 0.7 level, and as you can see, when price came back up above that level, we saw a big influx of bullish strength, closing as that big bullish engulfing. So I don't believe that we will see the market easily break through this region, which is why I anticipate 0.7250. If I take that down to the 8-hour time frame, it's much the same. We've got the moving averages just about to cross over, and we've now actually broken through these prior highs, which you'll see slightly more clearly on the 4-hour time frame. So this bullish leg does lead us to think that we could be coming back up to this level. Now we may not make it as far down as the 0.7050. As you can see, the wicks of these highs just here. It could be more like the 0.0760. Sorry, yeah, 0.7060. So anywhere between this region before then taking off. Now onto Usdjpy. Again, if we start on the weekly time frame, you can see that spike towards the downside actually formed a double bottom formation here highlighted in red, and that was actually within 3 pips of each other. These lows were, which is actually quite incredible, to be honest. And as we saw across the board, price retraced on this pair back above the 108 weekly support level. Now it's worth mentioning that despite this retracement, it wasn't quite as significant as the retracement that we saw on the Aussie dollar, which obviously closed bullish. We still closed bearish, which does hint at the potential for further downside. Obviously, the moving averages have also crossed to the downside, and we've broken these discrete higher lows. So there is the potential to push further downside, but as I say, price has seen that double bottom formation and is now trading back above weekly support. So this would suggest that price could potentially return all the way back up to prior highs around 114. Now that's not a definite, but I do think that price can quite easily come back up to the 110 monthly resistance level. I do think that we do need to see a further retracement to the upside, as we've just had week after week, these 3 weeks here of bearish price action following this breakout. So 110 is my initial weekly target before potentially coming all the way back up to the 112 region. Now that's not to say that we won't tap the 108 again or see further consolidation around this level. Now if we take that down to the daily time frame, you can see that Friday's candle closed as an inside bar, which supports the fact that price is somewhat indecisive around this region, and we could see consolidation. Now you can see I've just got this 108.75 level, which is in line with this previous structure over here. So we could in fact draw a small range in line with this inside bar formation, which would look something like that. So if I just extend that so you can see, now this suggests that price could consolidate within this region for a short while. We'd need to see a break above this 108.75 to then see 110 and potentially 112, or we'd need to see a break below this level, below the 108 weekly support, to then return to the 106 major support level, potentially even lower. So I think on this pair it's very much a wait and see, I guess, along with most of the market across the board here. So on the 8-hour time frame here, you can see that price is responding to that exponential moving average, hesitating slightly as we're moving towards that 108.75 level. Again, 4-hour moving averages are converging towards the upside, towards a crossover, but again we'll need to see a break through that confirmed crossover, and we can actually draw a Fibonacci on here. I wouldn't like to use this wick down here, as it was just an extreme movement to the downside, and obviously, as you can see, this could see price action back up within this refined region, which is in line with that 112 level. So initially 110, potentially 112 upside targets here. Overall though, I do expect to see reversals at some point from one of these levels to then make another attempt at the downside move. So now if we head over to Usdcad, and here on the weekly time frame you can see that we actually closed last week very bearish, with this big bearish engulfing that crashed back through that 1.3500. Now if you've been following my analysis, you'll know that I was expecting price to form a double top with this prior high up here around the 1.3750. We failed to do that, and we're now trading back at that moving average support. Nonetheless though, despite this big bearish candle, price remains in this overall uptrend. So I do anticipate slightly further downside, potentially to this 1.3250, but then overall there is still the potential to push higher and still create that double top formation at that 1.3750. However, that is slightly more long term now after we've had this big pullback. That is somewhat to do with the price of oil picking back up, but I'll show you that shortly. If we head down to the daily time frame, you can see that we can actually get this daily Fibonacci, this upside Fibonacci on, which has price just approaching this refined region. So this a reversal from this region would still line up with the overall upward trend, but as the moving averages converge towards the downside, we do have to watch this region, as price could quite easily roll over here and fall much lower. So I've got two levels that I'm watching here initially, and that's the 1.3350 in line with this structure just here, and the 1.3315 in line with these highs over here. You could draw that as a range. So I anticipate that this is the key region for reversals, and if we actually see price drop below this, we could then be seeing a break of 1.3250 to then fall towards the 1.3 major psychological level. However, my bias remains towards the upside here. After seeing price fall slightly lower within this region, I anticipate that we may be seeing price come back up, back to the 1.3500, and then potentially beyond to form that double top formation as I've just mentioned. So here on the 8-hour time frame, you can see the moving averages crossed over, broke through that 1.3500. We're now just approaching that refined region. You can see that price really needed this this significant retracement, as within this overall uptrend we haven't seen a very big pullback. Again, on the 4-hour time frame, you can see that we're just approaching these prior lows here, which remain as a key reversal region. If I take you over to oil, we can see on the weekly time frame here is the bullish strength that corresponds to the weakness seen in Usdcad, as we form a retracement back towards that $50 per barrel and towards that exponential moving average. But again, overall we are in a downward leg here, so we could actually see a reversal from this region in line with Usdcad, has potential to go slightly further, tap that region, and then roll over once again. So bearish short term within this refined zone, potential to then reverse back up to the 1.3500 and even 1.3750 longer term. Finally, if we take a look at Gbp USD, and we have been anticipating for a number of weeks now for price to come down to that 1.2500 major support level, and last week with the crash in the markets we did actually see that price pierced through that level. After a significant retracement, price failed to break back through the 1.2750 weekly resistance to actually close as a spinning top, forming this hanging man formation. So that's below the 1.2750 and the exponential moving average. It's quite a key region to look out for, as you can see how price has hesitated at this region time and time again. So we could actually be seeing price now roll back over and return to these prior lows around the 1.2600 and 1.2500. We'd need to see a break through that 1.2750 to then head higher towards the 1.3 major resistance level. Here on the daily time frame, you can see that following the spike towards the downside, we saw bullish strength. We're back above the moving averages, but again we failed to break through that 1.2750. So while we have been consolidating for quite some time here on the pound, and we are essentially back within that consolidation region, we haven't yet broke above this region. and there's one of two things we can do here. With this large downside wick, if we were to consider the downside wick, then we've actually broken these prior lows. If we were to disregard the downside wick, then this close here and this low has actually broken through these discrete higher lows. So now, as we watch price around this level, as we open this week, we'll be looking to form a new lower high to then see price roll over back towards the downside, towards that 1.2600 and then 1.2500. Something interesting that I'd like to show you on the daily time frame is a couple of trend lines that we can draw on, because again, if you've been following my analysis, you will recall that I anticipated that the pound could see a reversal in the long term, and after fulfilling this 1.2500 would then see upside towards this 1.3 major resistance. Now, that is still likely if we have a break of that 1.2750. But if we take a look at the longer term perspective, we are in this overall downtrend, and if we draw a trend line from this high up here down through this high here, then we can actually see that price is now just approaching the third test of this long-term trend line. So we could actually see price tap this trend line and then again head downside. 1.2500 is a very nice level as initial downside targets, and then longer term we could even be seeing 1.2. Now that's not a definite as of at the moment, because we could also obviously break through this level in line with my prior analysis to then see the 1.3 and beyond. Now if I take you down to the 4-hour time frame, what we can see is this downside Fibonacci. So we had the high, spiked through this 1.2750, attempted to move towards this overall downtrend, and then we formed a significant low here. So this gave us this Fibonacci, and this bullish leg has actually come within this refined zone, and we've just seen price form a tweezer formation with the last two candlesticks, which was also a rejection from the 1.2750. So price can quite easily roll over from here and see a move, initial targets at the 1.2620 before 1.2545 and even 1.2500. However, again, if we disregard this wick, then this low here, despite being a lower low to this consolidation, which has now completed, obviously the range duplication has now, I'm not going to draw it on, but we can see that the range from these highs to these lows has now been completed last week. But if we disregard this wick, then this was actually an overall higher low to these lows over here, and this 1.2545 is actually a very nice region to reverse from. So what we'd be awaiting for here is a potential break through this 1.2750, which would also line up with a break through and an invalidation of that downside Fibonacci. Now, if that does occur, what we could potentially see, I'll just take you back to the daily time frame. We could see price move towards this overall trend, retest the 1.2750 weekly resistance, and then extend higher towards that 1.3 level in line with this short-term trend. So that would be the third point of that short-term trend, potential retest of the longer-term trend, and then that could be the initiation of something much larger. Obviously that's much more long-term, so we'll really have to wait and see how price responds to this 1.2750. At the moment, I think that we may see downside, given to how price has responded over the past two candlesticks, that slight pullback. 1.2620 initial downside targets, but then we can put quite a nice tight stop on this and limit the losses. Stops just above that region. So the initial target 1.2620 before 1.2540. Quite a nice risk reward ratio there. As I say, if price breaks through this region, then upside. So I hope that all makes sense to you guys. Please don't be afraid to leave a comment or ask us for any more information if anything was unclear to you guys. But thank you for that, and I'll be catching up with you guys, catching up back with the markets for your midweek breakdown on Wednesday or Thursday. Have a great week, guys.